I'm here to talk to you today about unrelated business income tax. My name is Letitia Mayberry Wright, and I am Deputy General Counsel at GCFA, which is the General Counsel on Finance and Administration of the United Methodist Church. We're one of the agencies in the Methodist Church, and we have some background information that we hope will be useful to you. My goal today is to cover these topics. And covering these topics, the objective is to give you sort of a high-level overview of what unrelated business income tax is, so that you can it'll trigger in your mind, oh man, I really need to look this up in this situation, or I really need to consider this and part of our calculus of what we're doing. And then to hopefully talk to your tax advisor in that situation. So sort of be like your first wall of defense, having some information there. So I'm going to cover what it is, what the tax is, why it exists, when you should start considering worrying about it, and then a few other nuances related to it. And we'll wrap up from there, and hopefully I'll answer all of your questions. So what is unrelated business income tax? It is a tax on the income earned by tax-exempt entities that's not related to their purpose, their tax-exempt purpose, or what their day-to-days would be their mission of being out in the world. Why does it exist? As you can imagine, it can undercut for-profit entities, and it's sort of out of fairness. So if a church decided to start selling widgets, and the person down the street sells widgets, but is not a church, all of a sudden the church can undercut them because they don't have to pay taxes on that amount, and that's not really fair, or the goal of the exempt entity and the reason why they are exempt. So there's three things that need to be met for you to have to pay UBIT. So I'm going to use the term UBIT, which is Unrelated Business Income Tax. It's the acronym. Like the Methodist Church, the IRS has a bunch of them, and it's because they have such long titles, like the United Methodist Church. And so hopefully it'll shorten the presentation probably by 5 minutes if I do this. So when do you worry about UBIT? There's three things related to that. The first is if the activity you are performing for income is a trade or business. So what is a trade or business? That's sort of a weird term. And the definition that is given is a trade or business is defined as generally an activity engaged in for the primary purpose of generating income or profit. An example of that is renting parking spaces. If you're renting parking spaces, you're providing parking spaces to receive income. You're not likely renting parking spaces to individuals who are experiencing homelessness so that they have a cheap place to set up a tent. That would be like rent. That would not be renting parking spaces, right? So that is something you do to make income. If you are engaged in one of these activities, you need to continue your analysis. Is it regularly carried on? Is this activity regularly carried on? So what does this mean? I'm going to go back to my parking space example. It's really common with churches to be dealing with that issue. So are you renting parking spaces daily, weekly, every time that there's a baseball game in the stadium across the street, and every time there's a baseball game, it's pretty regularly at that point, then it probably meets that threshold. If you're doing it once, twice a year, probably doesn't meet that threshold of being regularly carried on. If there's like an annual event in your city and you rent parking spaces for this one annual event, it's probably that it would most likely not be considered regularly carried on. The third analysis is the activity related to the exempt purpose. So we're not talking about where the money is being spent. This is a really big difference. And this is something that actually changed a long time ago when this law went into place. It doesn't matter if you're spending the money that you make on the missional activities. It is 100% related to the activity. So the exempt purpose, back to the parking space example, is not to provide parking spaces. That's not something the church does, but or the food pantry is to provide food for low-income people, even if that money does support that mission. Again, I'm reiterating that because there's a lot of confusion over that topic. Of course, because we're dealing with tax law, there are exceptions. The next slide I'm going to show you are exceptions to the exceptions. So please bear with me. I promise I didn't make this up. So first exception, and again, I want to remind you as I'm talking about these exceptions, the idea is for it to be a high level overview here. So there's probably nuances here. I'm certain there are nuances here. And if you get into one of these situations, it's probably worth looking at. We have provided some additional resources also that's a little bit more fact specific. We provide some case law and some code citations for you to be able to really dig into it. If you get into one of these situations, please check that out if you're finding that you fit into one of these exceptions. So one of the exceptions is when substantially all the activity is performed by an unpaid volunteer. This is the bake sale exception, for example. Everybody's volunteering to do the bake sale. That's an exception, even though normally providing food and a sale that's a bakery, right? These people, it's an income. Maybe you do it every Sunday, regularly carried on, and it's not your exempt purpose. Well, it's provided by volunteers. Second exception is an activity carried out primarily for the convenience of church members, students, or employees. So it's primarily for the convenience of the individuals involved in the organization. What are some examples of this? This would be the religious bookstore, the school bookstore, the Sunday morning coffee shop that's only open on Sunday morning and really only there for church members, although someone from the street could walk in and buy a coffee. But really the purpose is to provide coffee for the church members on Sunday, but maybe you don't have that in your budget, so you sell it to the church members, even if you sell it for some income and that income goes back to the purpose of the church or to pay employees that provide that coffee. Selling merchandise, substantially all of which was donated. This is the thrift store exception. And then the fourth one is passive income. This is where we're going to go into a little bit more nuance of what that means. Some examples of this are dividends, interest, annuities, royalties, capital gains, or rental of real property. So the idea here is that you're not doing something to make this income. So you're not in the world of competition, right? That's sort of, if you think of it from that standpoint, you're not competing with other individuals who are trying to earn income, but are not able to because you're able to undercut them. So that's sort of the way of thinking about it and sort of the rationale behind this statute. So here's the exceptions to the exception. Okay, so that was an exception. You don't have to pay income on real property, a rental of real property. But now I'm going to tell you, well, actually, you have to pay it in these situations. And again, if you go back to thinking about fairness, so if the property is debt financed, it is considered UBIT. So like I said, I'm going to try to explain this so that it makes some sense. Is at that point, if you went out and got a whole bunch of mortgages and you bought the whole town, and you're able to do that without having to pay tax on that, all of a sudden you're entering the world of competition. So the way that they try to sort of hamper that is if it's debt financed, you do have to pay UBIT on that. If you are providing additional services, it could be considered UBIT. What does that mean? It's no longer passive is the consideration. Like you're providing cleaning services, front desk support. Essentially, the more and more you provide these services, the more and more it looks like UBIT. Other things that are not part of the exception of renting of real property, parking spaces, storage units, hotel rooms, warehouses, storage garages, All of these you have to pay UBIT on if you rent them. There is something that is sort of outside of this scope that to consider. If you're dealing with the fact that you have a parking lot and you don't use it, you just have it, you have a parking lot, maybe it even has a building next to it, you can rent that whole lot, the land that it is on, and it not be considered UBIT. It's the issue of if you're starting to rent like parking spaces, or you're providing something related to the parking. You paint the lines. That's not passive anymore. So if you're just renting the whole property, you don't upkeep it. You just say 100%. This is your property that we're leasing this whole lot to you. You wouldn't have to carve that out. The parking spaces out. It would likely not be considered UBIT. I also want to let you know there's a neighborhood land rule related to property. If you fall under this, you really should look at it. It's a really detailed rule. It applies to churches that purchase property that intend to build on that property, but can't do that immediately. So you're like building up reserves in that situation. In that case, please check out the link attached. And well, I'll just say that if you fall into this category, you really should look at it. It's very nuanced. So if you determine, oh man, I'm going to have to pay UBIT, what does that mean? An exempt organization that has $1,000 or more of gross income must file this form. It's 990T. The IRS calls it a TPDF, but if you're doing a Google search, the link is here. But if you need it, form 990T, you fill that out and you file it. It does mean that you're now on the IRS's radar. That is not necessarily a bad thing. You just need to know that when you will need to file this if you have $1,000 or more. An organization must pay an estimated tax if it expects its tax for the year to be $500 or more. Sort of like individuals who are self-employed have to pay periodic taxes throughout the year, estimated taxes. So this is something you have to do. It's not a huge deal, but as you'll see in my next slide, I'm sorry, I'm going to go back to that one. This is not to prevent you from participating in these activities, just that you need to consider the cost. So you need to consider the cost of filing the taxes. You need to consider the cost of the taxes. If you do them, it doesn't mean you shouldn't do them. And I want to reiterate this too, is that if you start looking like a business, you might lose your tax exempt status in general. The point is not for the church to have a small chapel that meets once every Sunday, and really its primary business is renting parking spaces. So the issue is, if that's where all of your energy, all the effort, all the time, all the resources go into, you're starting to create a problem where you are a business that supports a ministry. And that also doesn't mean that you couldn't be a business that supports a ministry. It just means you're probably not going to have tax exempt status for that ministry anymore. So you just need to know that, and that you would be entering a different world there. So it's not, again, to say don't do this. It is to say, if you do this, you need to consider tax costs, and you need to consider the cost of filing in any of these situations. So at this point, I'm going to go back really fast and reiterate this point again, because here's where the link is for the additional citations that I was talking about. It's on this slide. This was high level, so please, if you have additional questions, check that out. And at this point, I am open for any questions. I'm sure some came in and I have not been watching.
We absolutely got a few questions. People are very intrigued, interested, This is great. One question we got was using the terminology suggested donations. Can you, so maybe I'm just going to speculate here, like a church might have some sort of dinner and, you can come in and get the food for free, but they would suggest a donation of $8 a person for the meal. How does that play into all of this?
That's a great question. So I can imagine a lot of different scenarios with that question. And like all situations, there's an opportunity for abuse and there's an opportunity for an opportunity to utilize donations. So if you're looking at a donation for food, for example, what you're talking about there is you're starting to get into an issue of like gifts, right? So the donor can't take that as something deductible. So when you use that word donation, what I think you're opening people up to is the fact that they don't have to pay. But if they do, they're paying for a service for the meal, for example. It's just not tax exempt to them because they're receiving a benefit. And that's something that we're going to cover in another webinar later on this year, is stuff about gift receipts, which would be related to this topic. But that's a little bit nuanced. And I think I'm also envisioning the worst, a scenario where we have suggested donations and we're selling. Essentially what we're doing is we are a widget seller and we have suggested donations, and if someone doesn't give us the donation, they probably don't walk out the door with a widget, and that all of a sudden is something very different.
Gotcha. Continuing on that, we had a comment. I lost it now, but I think I remember. They said there's a bicycle group that utilizes the church's parking lot during the summer, and they do not charge for the use of the parking lot. However, once a year, that group makes a donation to the church. So a small donation, they said, but a donation nonetheless. So how is that kind of in the same boat, or is it because there's no expectation of it? How do you view that?
Yeah, so I think we're starting to get into a similar situation where you can't do something and call it something different. And because you called it something, the IRS cares what you called it. They're going to look at the activities that you did. So essentially, if there's any sort of communication, if this is an annual donation, it's always the same amount. It's related to what is fair for the use of the parking lot. Then I think you're starting to get into an issue. If the church really does not care if it ever gets a donation, and the bike group is just really grateful that the church exists and provides these spaces and gives a donation, and it's different every year, they do it whenever they want to do it. The church isn't like, hey man, you didn't give it like we sort of expect it, or like, when's that donation coming in? I think that you're looking at two different things.
Got it. And just letting everyone know, there's some questions about this. Some people probably joined late. You will get a copy of the slides with the hyperlinks that you can click in the follow-up email, as well as a link to the video recording. Next question is cell tower income considered rental of real property?
That's another great question, which we have information on. That could be a whole nother 10-minute presentation at a minimum. So that there's a lot of special rules around that is the answer to that question. We have a little bit of information, and it's probably very it is very fact dependent on where you put the cell tower, things like that.
All right. I think this next one's going to be a quick answer for you. What about leasing a designated 10 parking spots to a business out of 150 parking spots total?
So that would be considered UBIT. That's something that's 100% the category of the exception of parking lots.
Got it. The next one, the $1,000 gross income minimum is just from UBIT, right? Not tithes and offerings.
That's right. That's right. Yep. and it's income, right? So you get to offset that from your cost of providing it.
This next one says, also, can you count real expenses and depreciation against the $1,000 gross income?
Yeah, so that is the answer. Yes, you get actual expenses can be deducted from that.
All right, I'm reading this one cold. This is a long one, so here we go. We have several rental properties and only a couple have mortgages on them. They were bought for the intent to grow a bigger church campus. Neighborhood land rule. Would we only have to do UBIT on the ones with mortgages?
So yes, to the ones with mortgages, you might qualify for the neighborhood land use rule. I don't know your particular situation. There's numbers around that. So it's for how many, it's only for a period of so many years. You have to continue to have the intent to build the property. So that gets more nuanced. And I would suggest clicking on the link to read that to see if it's something that you could qualify for. But otherwise, yes, it's only on the buildings that have mortgages. It's not, you have a mortgage on one building and not on another. And therefore you have to pay UBIT on all of them.
Got it. All right, next, if a church has a vacant parsonage and they rent it to the public, is that taxable income?
So that's a great question. That is also there's a nuanced answer to that. If you're renting the parsonage, it depends if it has a mortgage on it. You probably can do that. If there's no mortgage, you can probably do that without paying UBIT on the rental income. But you will need to consider the fact that you will probably lose if you live in, most states have some sort of exemption, property tax exemption for churches. You probably will lose that exemption on that parcel of land, or at least some of them allow for partial exemptions. So you'll probably lose something on that. And it's something you should 100% again, consider in your calculation of deciding to do it. Because if you're going to charge rent, you need to include the property taxes that you'll probably have to start paying.
Excellent.
And you just need to know how hard it is to get that exemption reinstated too, if you decide it's something that's going to be very temporary.
All right, the questions keep coming. What about church preschools? Do they need to pay UBIT?
So that also depends. Is it part of, so it goes back to the 3-tier question. Is it part of the mission of the church to provide this? I think there are a lot of churches where one of my kids goes to school is a church and preschool, and it's tied to the church, and it's part of the mission of the church to provide this space for children. It's under the same EIN. That is one scenario. I think there's another scenario where you have a for-profit preschool renting the space, but so I think it's very fact dependent again. I think hopefully that sort of names the extremes though to consider.
This next one's fun. If they have a wedding venue on church property, is that like hoteling or is it exempt?
Ooh, interesting. I don't think I've heard that question. So a wedding venue on church property and they rent it. I think it probably depends what the purpose of the venue is. Again, so like, do you have to use the minister on staff? Do you have, is this part of what the church provides? Does everybody use this wedding venue space? Does it matter what type of service you're going to have on it? Is it so I think it has to align with the mission. Yeah.
I was just going to say they didn't elaborate, but let me toss a couple ideas at you. So if it's in like a chapel, let's say there's a chapel attached to the church, beautiful chapel, but that's used for church purposes, right? The intended use is it's the chapel as part of the church. But what if it's like, I've seen a couple churches that have like a gazebo out back, right? With a pond, and like that's more of less of a used for church purpose space. Would that affect it?
Yeah. So I think I know, so you mentioned the chapel, for example, where it's meant for church purposes. I think that in situations, you can rent that for the purpose of weddings, and maybe you don't really care what wedding occurs there, but it's a service because people want to be in a chapel in like a sort of a church setting. It's part of the mission of the church. I think that could look very different if you essentially built a chapel only for the purpose of weddings, like as a venue or where you're renting it out. And that's that honestly, it's pretty clear that the purpose is to make money. You're providing a trade or business at that point. Similar, I would say, honestly, with the gazebo, if it's like, this is the beautification of the church, we use it, we have our weddings there, the members of the church have our weddings there, this is our thing, but we also rent it for individuals and it's part of a service that we provide, versus, no, this is our designated place every weekend, it's rented out. That's what our purpose really for this gazebo is to provide weddings. Then I think you start to get into providing something different.
Gotcha. I think this will go back into the easy wheelhouse. Church with a gym that they rent out for basketball, pickleball, birthday parties. Is that do they pay UBIT for that?
So I think it would go back to the three characterizations. Are you performing a trade or business? And then is it regularly carried on? Is this it's sounding like by your list that it seems pretty regularly carried on. And is it part of your exempt purpose? So I do think that is at question here based on what the activities that you're listing, because and it honestly, it probably depends on how much you're charging for rent. If you want to provide a space and look, we got to cover our cost of the people who set up the space, clean up the space, and the air conditioning, that's one thing. If you're saying, no, we want to make money off this, then maybe you're starting to fall into, this is a trade or business. And then you probably goes into what type of, if it's passive or not. And then it seems a lot less passive if you're doing cleaning and providing services related to that, as opposed to the person's just renting the space.
This is another fun one. Our arts council offers several concerts throughout the year that has ticketed, like ticket prices, but all proceeds go to the church.
Oh, interesting. So,
I mean, I guess in my mind, instantly I go to two scenarios. When they say they have several concerts, is it like a group that they're bringing in and paying to perform, or is it like volunteers within the church?
yeah, well, and I think the other thing is you're talking about an arts council, which is different. So their question of if they provide UBIT, that's sort of their thing, as opposed to they give you a donation. And you receive the donation and that's acceptable. And then the Arts Council goes into what we're going to talk about at a different webinar, which is it a donation or not? Because if you are receiving a benefit, you have to subtract the amount of the benefit from the donation.
All right. The questions just keep coming in. A question about SteepleCom using church steeples as cell towers for a source of income. The info they saw was noted that it was not subject to UBIT, but they're now SteepleCom's looking at solar battery backup and EV charging stations as alternative source of income. Would these be subject to UBIT?
Another great, very fact-specific question. I imagine it is possible that it would be, and based on before you enter a larger agreement like that, I would ask my tax advisor to look into it, and someone who knows about nonprofits, who understands what UBIT is, has filed the forms before. So maybe not your standard accountant that does personal income taxes.
Here we have back-to-back questions that are very related. So I'm going to go one right to the other. We were thinking of possibly having food trucks in our parking lot this summer and may have them pay a minimum amount to park to sell food out of the lot. And the next one is we're considering using our parking lot to host a farmer's market where vendors would pay a fee to be able to set up their stands. Can you please suggest how we should analyze this activity?
Yeah, so that's what a great service. And I think you go back to a couple the standard first three questions, right? So is it a trade or business? Maybe. Is it regularly carried on based on if it's every week, the farmers market's every week, sounds regularly carried on. Same with throughout the summer, you're doing it all summer, the food trucks regularly carried on. And then the question is it outside the exempt purpose? And I think you get into a similar analysis that we talked about before of what's the with the preschool, what's the purpose of having that? So if you have a farmer's market because you live in a area where fresh produce is not readily available and you need to charge the vendors because you're going to all this energy to set it up, and there's real cost to you, and so you need to sort of break even there. That's one thing versus we see this as a way to provide income for our church. You're starting to get probably into a trade or business, and then you really need to analyze the specifics related around property, and if there's possibly an exception. I think it's probably unlikely for the type of rental space that you're talking about that this would fall into the exception for either of those. But there's maybe ways to frame it, and that's worth thinking about if this is going to be a big thing. Remember, every time that we're talking about a threshold of $1,000, I don't know what type of money we're talking about here, but that's just something to think about.
Next question. I think it piggybacks right on those last ones. It's a pumpkin patch. They open a pumpkin patch and sell pumpkins to the community. So it's kind of the same question about intent there, I think.
Yeah, and also, like, is this one time a year they have one event where they sell pumpkins? Then that's probably not regularly carried on. If it's all fall, you're looking at something different. And I think, again, the final thing to think about is the purpose is if you're an exempt organization, you're not supposed to compete with for-profit organizations doing the same thing and just have the ability to undercut them. So if you start to think about like, no, that's what we're doing, that's the whole purpose behind it, then really you probably are looking at UBIT.
Next one is, let's say that the church owns additional buildings. So the church structure, do churches have to pay taxes on those buildings rented to for-profit businesses?
So that's where you fall into the exceptions of real property. And if you have a mortgage or if you don't have a mortgage, and you need to consider some of those exceptions. And that's when you probably also need to, you're talking about probably substantial money on rental of a whole extra building. And I would for sure check in with your tax advisor on how much that is and if there are ways to structure it that work better for you.
Here's another fun one. So let's say if the church, what about rental income from other churches? So for instance, a church that rents out their facility for another church to hold worship in.
So I think it's arguable that it is for your exempt purpose. You're there, you're utilizing the space to us Methodists make disciples of Jesus Christ. If that's the purpose, I think you're probably safe within that zone.
Lots of questions about the parsonages coming through. I'm trying to sift through here. And daycares, I think we covered those. Does the UMC have resources for how to change tax exemption from a religious tax exemption to a welfare tax exemption?
So no, that's not something that we do. We're in the business of doing. If you think that you're no longer a church, but you're something else, you should definitely consult, I would say, an attorney in that situation and have them help you file some of the paperwork. I think you're, like, for example, low income housing exemption is really nuanced, is really fact specific, and it's just worth getting help on that.
How about using your parking lot for a solar power generation?
If it's solar powered for your purposes, I see no issue with that. It's you just utilizing your parking lot. And I'm sure you get some money back from putting stuff back on the grid. I just can't. Seems passive to me. Maybe there's a way to look at it differently. And at that point, I would call your tax advisor on that one. Not to brush it off. I just don't want to pretend I know everything about everything.
This is an interesting one. We own the parking lot behind our church and the parking lot behind two businesses next door. We don't charge the businesses next door to use that lot for parking or deliveries. Can we charge them something in the future so that we at least have the funds for upkeep, snow removal, mowing, repairs to the blacktop, and so forth?
Absolutely. You can charge people for utilizing that property. No problem. You just might have to pay taxes on it. So just consider that in your analysis. Also, a thing to consider, like I mentioned, if you are renting a whole parcel, so it sounds like you have an additional parking lot that just happens to be behind two buildings. If that's true and it's a whole separate parcel of land, you could just have them lease the whole parcel of land and you not do the upkeep. And have them be responsible for that. And then you'd be renting a parcel of land without, I'm making some assumptions here, without a mortgage. And I think you'd be safe there. And the $1,000 threshold is for all combined activities. That one just popped up really easy. Sorry, Jensen.
There we go. We lease our classroom building on our church campus to a nonprofit state-funded school with a state welfare exemption. We use the income to fund our budget, particularly the pastor's salary. We do have a mortgage, but initially used the classrooms for our own Sunday school. With membership decrease, we just don't use the classrooms any longer. Is this a UBIT income?
That might be UBIT. And remember, it's not about what you use the money for. It's about how you get the money. So you're talking about renting property. That's your analysis. You're renting property. And renting property is generally a trade or business. It sounds like regularly. And the question is it for your exempt purpose? And I think that's the one where you'd want to do some analysis on. Is it for your exempt purpose? And if not, then it sounds like something that you might have to pay UBIT on, but worth talking to your tax advisor about. And it sounds like you're also dealing with a school, public school, which they have their own rules, and I'm not privy to all of those.
Here's another one. The parsonage is rented out, but rented under market value to be affordable housing, right? Does that fall in line with, because it's a mission of the church, or would that still be a UBIT?
So you're also now talking about something very nuanced, which is affordable housing. And that's worth looking into. Another thing related to that, you guys are having some really good questions. Another thing related to that is, so it can't be for the benefit of yourself. So you can't, let me see if I can explain this in a 2-second question. But if you said, it probably depends who the person is who's living there, because you can't, it's considered something called private inurement if you are providing a service essentially for your own benefit. So if I create a system where my nonprofit purpose is to create a discounted rate for women named Letitia, and it's really for me to be able to get a discount, I can't do that, right? So if you're creating a low income housing for someone who maybe happens to be the pastor, or happens to be the kids of the pastor, it starts to look like private inurement, or happens to be the kid of the lay leader in the church. And like, did you do a survey? Did you set up a system where that the kid of the lay leader was chosen, or was it the lay leader said, my kid needs private low income housing? So you got to be careful about some of that. That's another thing to consider in this, but it sounds like you're also talking about low income housing, and that's a separate bailiwick also.
Next question is, can you go over the difference about the mortgage versus non-mortgage?
Sure. So the main difference is if it's debt financed, so it has a mortgage on it, then if it does have a mortgage on it, you have to pay UBIT if you're renting the property. If you're not renting the property, doesn't matter. But if you're renting the property and you don't have a mortgage on it, then you don't have to pay UBIT. And I think the easiest way to think about why that would happen is if there was a nonprofit company who went around and bought like strip malls because that was their way of generating money with loans, then all of a sudden they can buy so much more. They could buy like 5 strip malls with loans, and then now they're starting to enter the world of like a developer or a landlord, that they're entering that business world. So I think that's sort of maybe a way to help think about it. Why passive? It's not a perfect solution to that problem, but I think that's what they're trying to go for.
Is the $1,000 threshold for each activity or for all activities combined for the
All
year?
combined. It's
Excellent.
for the organization as opposed to an activity.
After a church merger, the church owns 2 buildings and they rent one out to another church for a year. Is this a UBIT situation?
I think that is less likely, like we talked about sort of with renting your chapel. I think that would be a really similar situation.
If you're subject to UBIT, how do you know what the rate is and how it's calculated?
It's the same as business tax in general. So you can look that up. Easy Google search.
All right. I think, let me look at this last one. Coffee time just before school at church from a trailer for outreach, but charge due to cost of coffee. Is this UBIT?
So I think that falls under the exception of for the benefit of the individuals there, is what I would guess. So if you don't mind looking at the slides again to consider if you think it falls under one of those 3 categories. If you meet the 3 rules, then you need to meet an exception for it not to be UBIT. And it sounds like the exception would be for the benefit of the individuals using the facilities.
So here's a church where they're renting out their family life center to create revenue to help cover the mortgage. Due to church decline, they need that help covering that mortgage. Can they offset the income by deducting the mortgage expense?
Oh, that's a great question. So you might be able to do that by a portion. That is something that I'm going to defer to a tax advisor on what you can offset and not. That's just not my purview.
All right. Well, we have literally gone through like 150 questions, and I've tried to clump the ones together that were similar. But I can promise everyone that we are saving this chat. We will go through the chat and make sure that if we miss something, we will reach out to you directly. And also, you'll receive a follow-up email with the slides that you can click on the links with the recording of the video. And also, you can respond to us there, and we'll be happy to make sure that you are taken care of. So thank you so much, Letitia, for this. Thank you, everyone that joined. So many of you, it was great info, great questions, phenomenal questions. And I hope everyone has a great rest of their day.
Yeah, thank you. Thanks, Jensen. Thank you, everyone.